Good afternoon, everyone, and welcome to Scale Up, Scale Out, Scale Away, How Server Vendors Are Transforming Today's Data Centers, Insights from TBR's Data Center Benchmark, outlining the recent results of the Data Center Benchmark. I'm Allison Crawford, and I will be your host for today's session. In the next 45 minutes, Senior Analyst Christian Perry and Analyst Christian McComber will delve into the trends driving the results featured in the most recent Data Center Benchmark to which you subscribe, followed by Q&A of these trends and how they will affect you. Before Christian gets started, there's some housekeeping items I'd like to cover. First, we'll be recording today's session and posting it on our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function to the right of your screen. Christian and Krista will address them at the end of the presentation. Or if you'd like a client inquiry for more detailed discussion, please reach out directly to Christian at the end of the webinar to set up that conversation. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides, as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight, and we'll be sharing all these social media links with you again at the end of the presentation. With that, let me introduce Analyst Krista McComber and Senior Analyst Christian Perry on the computing team here at TBR. Krista is the lead author of the Data Center Benchmark, and Christian is the lead on our data center research. Their insight into the operations and competitive strategies of data vendors helps our clients improve their strategic go-to-market plans and performance. And with that, let me hand this over to Christian.
Thank you, Allison, and thanks everyone for joining. Glad to have you with us today. So today I'm going to cover not only the quarterly performance that we've modeled, the highlights from the performance that we've modeled from the vendors that you see here on the right, but also the trends that we see shaping the market. And those trends that are essentially working to impact the performance of these vendors that we cover here. And we cover server, storage, and networking vendors in the benchmark. So we'll be looking at a few things. We're going to look at how customers are consuming hardware to satisfy their workload requirements and how this is working to impact the strategic plans of data center hardware vendors. I'll also talk about the opportunities we see in the mid-market for hardware vendors, especially on the storage front. We see plenty of traction there, especially as some of the opportunities in the upper tier of the customer side, up in the large enterprise side, start to trickle down on the technology side into the mid-market. And finally, I'll examine what we're seeing on the software-defined side, which of course continues to pick up plenty of steam and which we continue to increase in momentum moving forward over the next few years. So when we take a look at the data center ecosystem today, especially around the customer experience, we see an increased focus on workloads, and in particular, how those workloads impact or basically satisfy business requirements. That's the bottom line today, satisfying business requirements. So we see that connection now between IT and business growing ever more close. And so the conversations coming from the vendors need to be more aligned with business requirements. And for many of the top vendors, established vendors in the IT space today, that's a continuing challenge, although there's certainly progress being made there. There are more server technologies than ever that are available to customers today. So we start to see some splintering or tiering in the way that things are consumed. This is due not only to the collection of workloads themselves, but also the hardware beneath those workloads. So as things like cloud and big data have become more critical to some of these business processes and business objectives, we're seeing more inexpensive open x86 platforms, including white box servers being used to satisfy workloads on that end of the spectrum. And we'll see microservers being used more extensively into next year, especially when the ARM platform enters its 64-bit stage. That is the point where we expect the microserver segment to really gain steam. I can speak from the analyst front. That's something we're really looking forward to because we haven't seen really that level of competition on the chip front on the server side in a long time, and we do expect that competition is going to rise there and rise in a big way, not only among chip vendors, but also among the server vendors playing in that space. On the higher end, we continue to see mainframes, UNIX servers, and traditional x86 servers, as you see here, being used for workloads, the more heavily stressed processors and memory. So we're talking about those workloads like ERP, online transaction processing, and so forth. So as customers look to pair their workloads with the right server technology, we're seeing server vendors in turn alter their portfolios, alter their go-to-market efforts to accommodate all of these different needs. And one area in particular that vendors are targeting is hyperscale. So when we take a look at where we see hyperscale moving over the next few years, we look at the continued adoption of open architectures by the large-scale cloud players. So we're talking about the Amazons, the Facebooks, the Googles. When we look at that space, we see a very large presence there, certainly for hyperscale. But looking ahead, we expect an even bigger uptick overall across the overall server market in hyperscale servers and hyperscale adoption on the customer side. So we've estimated in 2012 that the market for hyperscale was $2 billion with 640,000 units shipped. And moving ahead into 2015, we expect an increase of 13% revenue CAGR to $3 billion and 970,000 units. So there are several general principles that we attribute to the rise of hyperscale. As you see here, including IT simplicity, IT flexibility, and of course the general rise of cloud. So when we look ahead, we see things like the growth of ODMs, such as Quanta, continuing to impact the market. We are also seeing both Tier 1 and Tier 2 server vendors looking very closely at that cost structure being used by ODMs and having that general effectiveness in terms of selling their wares to these big cloud players. So over time, we do expect that these sort of cloud-driven concepts will trickle down into the enterprise space. In turn, that's going to create more opportunities for both Tier 1 and Tier 2 server vendors as long as they have the portfolio options to support these requirements. When we take a closer look at hyperscale server revenue, we estimate that the top server OEMs will gain the bulk of the revenue, but there's still a big chunk here that's going to be taken by ODMs as they seal these sort of large deals with established customers. We do expect that over time, hyperscale deployments will move downstream, as I mentioned. We see this now in the mid-market customers looking at large enterprise customers and looking to get some of those technologies into their environments. We expect the same thing to happen with large enterprise customers looking at the big cloud players and looking to integrate some of those technologies into their environments. When we take a look at the factors for success in this market, for OEMs in particular, that success really hinges on their ability to do things like embrace open standards, enable unified management of these large-scale server deployments, and to a lesser degree, but not necessarily a less important degree in the big picture, is the ability to provide support around these technologies, especially when you move into the enterprise space. with Hyperscale, support will be more of an opportunity. So when Tier 1 server vendors, Tier 2 server vendors are offering Hyperscale products, certainly that wrapping of support around these technologies will be attractive to enterprise customers as they move forward with adoption there, because it's a bit of a different concept from very purpose-driven x86 deployments. So from a wide-reaching perspective, we're really seeing a few things that are working to create shifts in the data center market. One of these is the move towards commodity hardware. Customers really seem to recognize more than ever that they accomplish things, and I'm talking about meeting business requirements by placing many of their workloads on commodity servers, commodity storage, and increasingly even commodity networking gear. So why is this happening? So first, technology is evolving really so quickly that now we see server platforms working on essentially a level playing field. If it's using Xeon, the performance of one server's vendor is certainly going to be pretty similar to the performance of the next guy's server. Second, so today's software management platforms is really where we see the differentiation. What's running beneath it doesn't matter quite as much as what's running above it and how easily customers can manage everything that sits below it on the hardware side. So naturally, we're not talking about all workloads here. So we're talking about those day-to-day business requirements. And that's where we're seeing that shift. This also plays directly into the influence of cloud. So when we look at the overall data center ecosystem, we all know that customers are increasingly considering and in many cases using those public cloud resources for compute and storage. But that doesn't mean that those are necessarily missed opportunities for hardware vendors because A, those vendors can provide the hardware backbone on which those services run, of course, and B, they can hone those solutions to provide sort of server-centric features for customers using on-premises hardware. And this plays into the third point on this slide, where we see the mid-market, as I mentioned previously, as coming up in terms of opportunity for vendors in the data center hardware space. And I'll touch on that more on the coming slides. So when we take a look at data center revenue, and again, this includes server, storage, and data center networking, we saw it decline 3.3% year to year and increase 1.6% sequentially. This is for the second quarter of this year. As you see mentioned here, storage declined sequentially, dipping 5.8% and 4.3% year to year due to what we see as higher or tighter competition in the mid-market and really tight IT budgets as well. We do know that customers are squeezing more out of their IT dollars, so that means more effort to virtualize wherever they can, both on the server side and increasingly on the storage side as well. Networking was the only product segment to increase revenue year to year. That was 3.1% year to year and 3.9% sequentially. And that increase on the networking side was for the second consecutive quarter. We saw that x86 server revenue dip 1.4% year to year due to those continuing pricing pressures we see in the market. I'll talk about that a little bit later. But that revenue, that's x86 server revenue, did increase 3.9% from the first quarter due to what we see as some momentum with these cloud build-outs and also sales on the converged infrastructure side. Proprietary server revenue, things aren't very positive here. Revenue fell 18.2% year to year due to what we recognize as the ongoing contraction of UNIX server market. It did increase 13% sequentially due to improved performance from IBM and its System Z portfolio. Now, on the profit side, we saw that data center gross margin decline 70 basis points sequentially, and that was 110 basis points year to year due to some of these trends we see around commodity hardware, and we do expect these trends to continue, especially as some of these software-defined technologies continue to increase both on the investment side and also on the portfolio side of vendors in this market. It's really becoming a tougher business to compete in these days, especially here as you see vendors playing in the server space. Looking at x86 server trends moving ahead, we do expect that the overall x86 server market will remain in flux through 2015, especially as customers continue to look at solving their business needs rather than just looking at the hardware to run applications. And this is where we see workloads coming more into the mix. So it's not just about running individual applications, it's running a workload or a set of workloads to really tie into those business needs and satisfy those business needs. So as customers adopt this sort of big picture strategy, they're considering all of their options and not just a specific server type for everything. So for example, with microservers, as you see at the bottom of this slide, we do expect that they will be a significant piece of the overall server puzzle moving forward, especially, again, towards the latter half of next year. So now customers will have a variety of server platforms to accommodate these blocks of workloads in their data centers. Again, those blocks of workloads that tie to business requirements. So now not only will there be tight competition among the existing technologies on the x86 side, but also because of the fewer opportunities that are available for server vendors in general as customers migrate certain workloads to the cloud. So taking a look at x86 server revenue, we saw that overall revenues fell slightly in the second quarter, dropping 1.4% year to year compared to a 0.2 increase in the first quarter. We're really seeing some hefty price competition happening in the market, as I'm sure many of you are as well, as vendors like Dell price their servers aggressively to gain market share. We're also seeing Tier 2 OEMs being very, very aggressive with their pricing, continuing to expand their portfolios, which is also impacting overall revenues. So take a far look to the right here. You'll see Unisys way over there. So although it has a very small piece of the overall x86 market, there's some interesting things happening with Unisys. So that growth for the quarter was basically bolstered by the increase of mainframe deals to its revenue mix. Why is that happening? It's shifting its ClearPath portfolio off of proprietary CMOS technology onto Xeon. This is really worth watching because if Unisys is able to successfully market and sell x86 servers on the premise that they're mainframes, that could really spell what we see as larger opportunities for some of the Tier 1 vendors. So all of that investment that it previously put on the hardware side, now it's dumping into software to really, what it says is helping to increase the reliability and the uptime and things like that typically attached to mainframes or associated with mainframes. So definitely worth watching there, again, as customers increasingly consider the x86 platform for all of their server needs, but of course within certain verticals, and I'll talk about this a little later, there's still opportunities for mainframe vendors. And now with Unisys leaving, that doesn't leave very many on that front. So on the proprietary server front, transitioning to this, we see continuing interest in memory database technologies from customers. Now that we see it's working to provide an opportunity for both IBM and Oracle to show the value of using Power and Spark machines to really get at those business insights faster. There's also some movement on the Power front where IBM is looking at UNIX and likely saying that, hey, we're in trouble if we don't shift our focus over to Linux. And that's essentially already happened with IBM investing really heavily there to accommodate customers who are seeing more value in using more flexible Linux solutions in their environments rather than some of these aging Unix technologies. And speaking of aging, the good news for System Z is that there continues to be plenty of customers in the global market who are using some of these complex legacy apps, which helps in part to keep mainframes alive. But don't underestimate the mainframe. We still see vertical specific uses for mainframes, for example, in the financial market. With that said, we do see vendors like HP aggressively marketing x86 platforms as viable alternatives. So IBM certainly has its work cut out for itself to maintain a presence in today's data centers. So yes, the Unix server market is certainly struggling, though we saw the proprietary server revenue declines improve from negative 23.9% year to year in the first quarter to negative 18.2% year to year in the second quarter. Unisys and Fujitsu recorded two of the largest year-to-year proprietary server declines in the second quarter. So for Unisys, I explained the shift there from that proprietary CMOS technology to x86. But for Fujitsu, for its part, we know it remains heavily reliant on Japan. And in Japan, of course, the ongoing depreciation of the yen is working to compound revenue pressures from x86 servers, virtualization trends, and some of these other trends that are pressuring that market. So over to the storage side of the house, we see a few trends here working to shape or impact the performance of vendors in this market. Flash is really becoming a star, if you will, both up and down portfolios, from mid-market products all the way up to enterprise-class products. In fact, we're really seeing Flash as a differentiator when it comes to vendors trying to penetrate the mid-market. A good example here is EMC with its VNX2 hybrid arrays. This is the next evolution of the VNX platform, and there's also an all-flash model there too with VNX2. So according to EMC, that flash optimization in VNX helps to improve performance. I think they said up to 4 times over the previous generation of VNX. That's a big step, and that's something that we see being really attractive to mid-market customers who are trying to get some of that performance in their environments that they see on the big enterprise side. I talked about this before with mid-market customers looking up to their large enterprise brothers and sisters and looking to get some hand-me-downs in terms of some of those technologies. Of course, those hand-me-downs have to come through the vendors, and we see that happening here. We're also continuing to watch the move toward software-defined. The bottom line here, I guess there's a lot of bottom lines, but one of the bottom lines is that customers want more control over their environments. And if the hardware vendors in the data center space don't provide tools that deliver enough management, customers simply are going to look elsewhere for those tools. And when they look elsewhere, the bad news is they might also look at other hardware. That includes white box gear. White box vendors, ODM vendors, certainly a threat to the established vendors in the data center market. But to stave off that threat, we're seeing more investment among storage vendors as well as server and networking vendors to build software that helps their customers. So So positive things happening on that front, but certainly a lot of work to be done, a lot of work around messaging to help customers understand how the heck they can use some of these software-defined technologies, how they can provide benefits over what they already have in their environments. So certainly a lot of them are using software to control a bulk of their environment. So what can software-defined technologies bring that they're not already benefiting from in their environments? That's the challenge for vendors in the market today. Next slide. It didn't update here. Okay. So looking at storage revenue in the second quarter, we saw the decline improve from negative 6.2%. Actually, I'm going to try and advance a slide here. Okay, we're all set.
You guys can't see a bubble chart?
So it looks like we have a few people here with the presentation, and it's only advancing for one of us.
Folks out there, if anyone's not seeing a bubble chart right now, can you send me a message? It just looks like it turned.
Yeah, it looks like it just updated.
Okay.
Sorry for the disruption. So looking at the total storage revenue in the second quarter, we saw the decline improve from negative 6.2% in the first quarter to negative 4.3% in the second quarter. So while the majority of storage vendors in this space experience year-to-year revenue declines during the quarter, two of the largest revenue contributors, you see them here, EMC and NetApp, they were able to achieve single-digit growth from the year-ago quarter. We also saw that NetApp, for its part, surpassed some of those key competitors. So we're talking about EMC and HDS. It surpassed those in revenue growth during the quarter. In fact, we also saw that NetApp reported that every FAS platform recorded year-to-year unit and revenue growth during the second quarter. So I talked earlier about some of these software-defined trends and how they're impacting the market. And really, outside of the greater virtualization effort, we're seeing some of the most focused efforts really happening on the networking side in terms of this new software-defined concept. We see that happening because the network is increasingly becoming the bottleneck in data centers today. It's no longer on the server side, no longer on the storage side, it's on the networking side. There's simply a boatload of data funneling through these ecosystems today, so customers need better, and really by better I mean more flexible, more open solutions for making sure that the data gets where it needs to go. We think of SDN as what we call the post-cloud transition. Cloud is here, cloud is established, so now customers are looking to adopt pieces of the cloud. I talked about this earlier, so to integrate these various pieces into their environments. For example, there will continue to be certain types of companies or even entire verticals that aren't moving to cloud at the same rate as others due to some of these concerns around security, concerns around regulations. But that certainly doesn't mean that they can't take advantage of the service type functionality that exists with cloud offerings. So as the attention grows around SDN, we're now seeing more active participation in various standards bodies, including Open Daylight. And you can certainly bet that customers are keeping a very, very close eye on Open Daylight and other standards efforts as well, because they don't want to make the wrong decision when it comes to adoption. The same goes for vendors who opt into these efforts. Certainly the wrong decision could lead to lost opportunities, especially as this segment continues to grow. So taking a closer look at networking revenue, we saw growth accelerate from 0.2% year-to-year in the first quarter to 3.1% in the second quarter. Now, Cisco, obviously, with the big presence that you see here, continued to account for the majority of total networking revenue in the second quarter, but it also posted the fourth largest year-to-year revenue growth according to our estimates. We do think that Cisco will maintain single-digit growth into 2014 due to that sort of continuing ability to provide the entire networking spectrum of infrastructure, that the overall networking infrastructure that customers continue to require in their environments. So that's a look at findings from the second quarter, and looking ahead at the next quarter for the benchmark and the rest of our research, we'll certainly continue to closely watch the trends around the software-defined data center and how that's shaping investments on the vendor side. We're also continuing to monitor the converged infrastructure market, including our next round of customer research with our Converged Infrastructure Landscape Report, the second iteration of which we expect to launch in the field early next year. And we're continuing to monitor the impact of cloud on data center hardware vendors. I spoke to that a little bit here, and we'll continue to do that moving forward, including how vendors are shaping their go-to-market efforts and working to meet some of these opportunities that are emerging on the customer side. So I'd like to open up the platform to Q&A. So if you have any questions, feel free to submit your questions through the Q&A function in the online room.
Great. So we've actually had quite a lot of questions come through. So if you have additional questions, send them through now. I'm going to try to talk really slow and give Christian some time to read through some of these. So the first one we have, you guys, is when you say scale out, are you thinking about multiple boxes or are you thinking about the software architecture? For example, both IBM mainframe, and I'm going to butcher this, I'm sorry, CICS MRO is a scale out within the box architecture, as is IIS-based application server and Windows Server.
Yep, thanks for your question, Stan, and that's a good question. And so the way that we look, when we're talking about scale out, we're talking about multiple boxes. Now, certainly, scale out does exist within certain architectures, as you've mentioned here. But for the greater picture, when we're looking at scale out, we're looking at, when we look at scale up, we look at a single stack. We look at scale out, we look at multiple boxes, but it doesn't necessarily need to be multiple boxes anymore, especially when we look at some of these hyperscale products that are essentially self-contained, and microservers as well, holding a lot of servers on a single board. So I think there's a lot of different dynamics, and things are changing as we move forward and as some of these technologies get more condensed.
We had another question come through. It was on the x86 bubble chart earlier in the presentation. The first part of the question is, are the margins really the margins that Cisco gets from x86, or is this all of Cisco's margins?
Hi, this is Krista. I'm happy to take this question. So the bubble charts that you do see reflected here, the gross margins are actually the total data center gross margins for the vendors. So for Cisco, this gross margin would be reflective of the combined networking, data center networking, and x86 server gross margins. So that is your y-axis there, and then your x-axis is going to be the revenue growth for that particular segment. So it would be Cisco's x86 server revenue growth, and then the size of the bubble itself indicates the vendor's revenue base in that segment. So again, in this case, Cisco's x86 server revenue base.
Okay, and then we had a follow-up question from the same question poser, I guess. Additional question on the networking bubble chart. Is this just data center networking revenue or all networking revenue from all the vendors?
This is the data center revenue. So it's not going to be necessarily every switch or router that the vendor sells. We do focus on the top-of-rack switches, those pieces of networking that are very core to the data center itself, rather than some of the more peripheral equipment.
Okay. The next question we had come through. Hyperscale growth. What's the breakdown of the $2 billion revenue today in terms of ARM or x86-based systems today? Who are the leading OEMs?
So when we estimated this hyperscale marketplace, we did look at it as a whole. I'm hesitant to throw out specific breakdowns without doing some additional digging, but what I would say is we do expect this marketplace at this point in time to skew more to x86 as compared to ARM, but particularly in the later half of 2014 and into 2015, we would expect ARM-based servers to gain share in this marketplace with the rise of microservers, as Christian alluded to in this presentation. And then in terms of the leading OEMs, those are going to be the Tier 1 players, Dell, HP, IBM.
Right, and we certainly see an effort among certain Tier 2 server vendors, including Lenovo, to go very hard after the hyperscale space. We do know that Lenovo is looking at the ODMs and looking at the cost structure of ODMs and considering a larger play there. There's certainly a large piece of that pie to be had moving forward. So certainly, yes, we do see the leading OEMs, as Krista said, in the Tier 1 bunch right now. But there could be some movement moving forward as some of these Tier 2 server vendors look to take a greater piece of that pie.
The next question we had come through was, what is the impact on margins? And I believe this is in relation to workloads.
I believe I followed up with Duncan, and I believe that it was the impact of adoption of hyperscale servers on the traditional x86 server marketplace. And so the answer there would be that as hyperscale server adoption grows in the marketplace, we will see that the gross margins are going to be dampened overall because, of course, these are less robust, lower-end machines.
Okay, the next question we had come through. Oh, sorry, someone just sent a question. Hold on, guys. I apologize. Sorry. What are the top workloads? Is this the question? What are the top workloads in this space?
Yeah, I think we got a few workload questions here. So when we look, this ties right into what we see as tiering on the workload side. So customers are tiering their workloads according to not only the architecture or infrastructure that they have in their environments, but potentially the infrastructure that they will buy to meet workload requirements or solve some of these business pains moving forward. So when we look at things like hyperscale, we really see things like lower-end web hosting, Hadoop queries, things of that nature on the hyperscale side, driving that segment now. But then, when we look at more of the scale-up architectures or infrastructures, we're looking at things like online transaction processing, ERP, and so forth. We've also done a lot of research to see where workloads are falling out on converged infrastructure as well. And we do think that, especially as customers deploy more of this infrastructure, that they're really going to be focusing on workloads such as some of the data-centric workloads, such as database, data warehousing, big data analytics. We see that happening, and we continue to expect that will happen moving forward as customers look to derive value from all of this data collecting in their environments, but not only historical data for trends, but also data as it's happening, so that customers can sort of expect things that are going to happen essentially as they're happening or as they're about to happen.
Okay. Another question we had come through. On data center ecosystem revenue, what's your best breakdown in percentage of solutions in open source versus the alternative?
Yeah, we can make a note to follow up on that question. I think we'll have to dig in a little more deeply for that.
Okay, and you may have answered this one already. we want to hear more about the workloads, not just in the cloud, to understand the relative percentages. Follow-up question from Duncan. That might be an offline conversation.
Yeah, we can certainly take that offline. We do have research, especially in the cloud, to see where workloads are falling out there on that side of the house. Yeah, we can touch base with our software practice and certainly get some insight for you there, Duncan.
Okay. Another question came through. I noticed off Microsoft's new storage capabilities in W2K12, e.g. the SMB3 stuff, which seems maybe like software-defined storage and to encroach on the need for a SAN. What's TBR's take on this?
Yeah, so I'm reading this question as well. Storage capabilities, it seems like. Well, if I can comment on software-defined storage and its ability to potentially eliminate the need for a SAN, yeah, I mean that's certainly something that we don't see quite happening just yet in terms of and let me make this clear. We don't see that the SAN going away certainly anytime soon. There's not an immediate danger for high-end storage hardware because of software-defined storage or software virtualization, but we do see increasing opportunities for software-defined storage to create a greater need for commodity storage hardware beneath that software management layer. So when we look at things like Viper, EMC's Viper, we see a software platform that's being designed to play with all storage players, including hardware, including commodity hardware. So so in terms of now we see some of these things being built into software platforms increasingly. Yeah, we definitely see a move in that direction towards software managing hardware, that whether it's commodity or it's branded storage hardware, whatever it is. That's where customers are going to migrate to a great extent over the next 3 to 5 years. We see this happening on the networking side as well. Perhaps it'll happen a little more there because of that bottleneck that I talked about earlier.
Okay, we have a couple more questions that come through. The next one is, are the scale-out servers included in what we see being called mega data centers?
Yes, so yeah, when we talk about these mega data centers, so the Facebooks and the Googles and the Amazons, yeah, so we're talking scale out there certainly, and it's a little different than what we're seeing in the enterprise space, because on the enterprise side we're still seeing primarily branded hardware, branded servers, and some white box servers. But in the mega data centers, you're talking primarily ODM, because certainly those customers have the IT staff to manage the hardware and even design the hardware the way that they want it, and then they have the ODMs build it, and that's why you're seeing the rise of the Open Compute project increasingly to facilitate some of these cool new designs that we're seeing in these mega data centers. So yeah, it is hyperscale.
Looks like we're actually out of the allotted time. We have a couple more questions in queue, so I'll pose one more, and for those of you who haven't had your questions answered live today, I'll have the analysts follow up with you directly. The last question we're going to take today, guys, is can you talk more about some of the vendors that are contributing to Open Daylight?
Sure. So we know Cisco is certainly a leader in the Open Daylight charge, if you will. And it's used Open Daylight to develop its Open Network Environment Controller. So we do think that Cisco could leverage Open Daylight to position that controller as the industry standard. It would love to be there. And to also sort of optimize that controller to run on its switches, those 3100 switches that were launched in September. So we do know that Cisco is investing heavily in this space, and we do think that Cisco will introduce more proprietary SDN technology in the fourth quarter and moving ahead. So Juniper, we know that Juniper is contributing its, I think it's the Open Contrail SDN controller to Open Daylight, but it's not really actively collaborating on Open Daylight product development. I think that Juniper noted that it's going to reevaluate its commitment to the project after a couple of years. So who else? HP. So HP, for its part, does not participate in Open Daylight. So instead, we see it sort of working to compete with a more holistic SDN ecosystem. So it's working with some of these partners like Intel, Microsoft, VMware, F5 to launch that HP SDN developer kit. I think it's set for launch late this year. And also, also on the radar there is that HP's SDN App Store, which I think is slated to hit in the first half of next year.
Great, thanks. With that, we are out of time, so I want to thank both Krista and Christian for the presentation today, as well as everyone for joining on the presentation and all the questions you sent through. As I mentioned, if we did not get to your question during the live presentation, the analyst will follow up with you directly to set up some time to have those questions answered. As I mentioned, we are putting all of our recordings onto social media, so I have all the links here for you to be able to track the conversation, as well as join in the Twitter conversation, both with Christian, Krista, and TBR, the Twitter handles listed here. Before you sign off, there is a short survey that we'd like you to fill out. How valuable was the webinar? How good was the presentation? And are there any other open comments you'd like to give us about topics you'd like to see or ways we can improve? We are taking this feedback very seriously and using it to improve our presentations quarter to quarter, so anything you share with us is greatly appreciated. I'm going to leave the chat function open for another few minutes to give folks a chance to ask any follow-up questions or set up some additional time with any of the analysts. And if we don't hear from you this quarter, we will look forward to having this presentation again next quarter. So happy holidays early, everyone, and have a great afternoon.